In this video, we're diving into how to separate your personal and business expenses the right way using Bluevine's business checking account. What's going on, everyone? My name is Eric Hunsaker, and on this channel, we cut through the fluff to help you make smarter business decisions, especially when it comes to your money. Let's get into why keeping your personal and business finances separate isn't just a good habit. It's one of the smartest moves you can make to stay legit, stay organized, and save yourself a ton of stress when tax season rolls around. Why this even matters. Let's get started with the big question. Why does separating personal and business expenses even matter? If you've ever bought groceries with your business debit card or paid for a client lunch with your personal one, you already know how messy this can get. And that mess doesn't just stay in your bank feed. It shows up in your bookkeeping. It affects your taxes. And if you ever get audited, good luck explaining which Netflix charge was business related. Here's the thing. If your business is an LLC or a corporation, separating your finances isn't just smart, it's legally required. One of the main reasons that people form LLCs is to protect their personal assets. But if you're constantly mixing expenses, then you're putting the protection at risk. It's called piercing the corporate veil. And trust me, you don't want that. But even if you're a sole proprietor, keeping things separate makes bookkeeping 10 times easier. Helps you understand how your business is actually doing. And it makes things way smoother when it's time to file taxes. So yeah, it's a big deal. What makes Bluevine a good option? All right, now that we've got the why out of the way, let's talk about the how. And that's where Bluevine comes in. Bluevine is one of the better options out there for small business banking, especially if you're a solo founder, freelancer, or side hustler. It's online only, so there are no branches to visit, but in exchange, you get no monthly fees, 2% interest on balances up to $250,000 if you qualify, and a pretty clean dashboard to manage everything. But what really makes Bluevine stand out is how it helps you organize your money inside the account. You can create something called sub-accounts, which are basically like digital envelopes inside your main checking account. These let you split your money into categories. One for taxes, one for marketing, one for paying yourself. And this makes it really easy to track your spending without needing multiple physical bank accounts. They also integrate directly with bookkeeping tools like QuickBooks and Xero, which makes syncing transactions and categorizing expenses way easier. Now let's break down what you need to do to actually set this up the right way. Step 1, set up a dedicated business bank account. Now this sounds obvious, but it's worth saying. If you're still using your personal checking account for business stuff, stop. It's time to open a proper business account. You'll thank yourself later. When you sign up with Bluevine, make sure to register your business details accurately. That includes your business name, your EIN or employer identification number or social security number if you're a sole proprietor, your business address, business category. Now try to match this info exactly to your state's business regulation and what's on your tax forms. The more aligned your records are, the easier time you'll have getting approved and staying in good standing with the IRS. Once you're approved, avoid the temptation to use this card for anything personal. Set a hard rule for yourself. If it's not a business expense, it doesn't go on the card. Now to get started with Bluevine, just click the link down in the description, which will bring you to this page right here. From here, you can just click on open an account and fill out this brief information here to get started. Step 2, organize your money with sub-accounts. Now, one of the most underrated features of Bluevine is the ability to create sub-accounts. Think of these like folders inside your checking account. Let's say you bring in $10,000 this month. Here's how you might split it up. $3,000 for taxes, $2,000 for operating expenses, $1,500 to pay yourself, $1,000 for savings or emergency fund, and $2,500 to reinvest in the business, like marketing, gear, contractors, etc. With sub-accounts, you can literally drag that money into each category so it's visually and mentally separated. You're less likely to overspend because you can clearly see how much is actually available for each purpose. You can also rename each sub-account to whatever makes sense for you. Some business owners use them like buckets for profit first, if you've read that book. Others just use them for quarterly taxes, payroll, and expenses. However you do it, the key is to build a habit around checking and updating them regularly. This system helps you stop treating your bank balance like one big pile of money and start seeing it as a tool to manage your business better. Step 3, track expenses in real time. Now, here's the part where most people get lazy about: tracking. Bluevine automatically recognizes some of your transactions, but don't rely on it to get everything right. Take 5 minutes at the end of each week to review what's coming in and what's going out. If something looks off, fix the category then and there. You can link your Bluevine account to tools like QuickBooks, which pulls in your transactions and helps you label them by category. But even if you're not using accounting software yet, you should still make a simple spreadsheet to track this manually. Here's a simple system to follow. Write down every expense, label it, whether business or personal, hopefully just business. Add a category: marketing, software, supplies, travel, meals, etc. Review your totals at the end of each month. When it's time to file taxes, all this prep work pays off big. You'll know what you spent, where it went, and how to deduct it. Step 4, pay yourself the smart way. One of the most common mistakes solo business owners make make is mixing personal and business income. You get paid by a client and then just swipe your debit card at Target or Venmo your rent. That's a red flag. Instead, treat yourself like an employee. Once a month or twice a month, transfer a set amount from your business account to your personal account. Call it salary or owner's draw, whatever works for your business structure. And here's the trick. Don't use your business debit card for personal stuff. Ever. Even if it's just a $6 coffee. Make the transfer first, then spend from your personal account. It seems small, but this one habit can protect you from a mountain of stress, confusion, and even legal issues down the line. Step 5, keep your records clean. Once you're up and running, your goal is to keep your accounts clean, organized, and audit-proof. A few extra tips here. Save your receipts. Apps like Expensify or QuickBooks let you snap a photo and attach it to the transaction. You don't want to dig through a box of crumpled papers at tax time. Write notes on weird transactions. If you had a client dinner or bought a gift card for a team member, write a quick note in your bookkeeping software. Future you will thank past you for the clarity. Check in monthly. Schedule a money day once a month. Review your income, expenses, and sub-accounts. Make sure everything still makes sense. What if you already mixed things up? Now look, it happens. Maybe you use your personal card for a business expense or the other way around. Here's how to fix it. If you paid for a business expense with your personal money, reimburse yourself from the business account and document the transaction. If you accidentally use a business card for something personal, treat it as an owner's draw and make a note of it. Just don't make it a habit. The more you do this, the harder it is to keep things clear. Common mistakes to avoid. Let's wrap up by going over a few things people get wrong. 1. Using one account for everything. This is the biggest red flag for IRS audits. If you want any legal protection or tax clarity, don't do it. 2. Thinking a debit card equals organization. Just because you have a business debit card doesn't mean you're tracking anything. You still need to log and label expenses. 3. Not paying yourself at all. If you treat your business like a piggy bank, it'll always feel like chaos. Set a pay schedule and stick to it. 4. Ignoring taxes until April. Don't be that person. Use a sub-account for taxes. Set aside 25 to 30% of your income as it comes in. Then when taxes hit, it's just a transfer, not a panic. Separating your personal and business expenses isn't some boring financial chore. It's the foundation of running a real sustainable business. And tools like Bluevine make it easier than ever to keep your money clean, organized, and working for you. So if you've been winging it until now, no judgment. But let this be your sign to clean it up. Get your accounts in order and start treating your business like a business. You've got this. Now, if you want to get started with any of the products that we talked about today, like Bluevine, you'll find links for them down in the description below. These are affiliate links, which means we earn a small commission when you use them, at no extra cost to you. And these commissions really help support the channel, and they allow us to continue to create free content just like this. So if you end up using them, we thank you so much in advance. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss another video. Here on this channel, we make videos dedicated to helping new and existing entrepreneurs get started and succeed in business, so be sure to subscribe. But other than that, thank you so much for watching. We'll see you here in the next video.